30 on May 1st. New month. Big week ahead. We have FOMC on Wednesday, non-farm payroll on Friday. Two major U.S. catalysts going into this week. The markets have basically tried to price a lot of stuff in, like, hey, you know that recession? We kind of did it last year. So anyway, let's get into the charts here in just a moment. We understand there's risk in trading. Please don't always use trade capital only. Do not trade with money you can't afford to lose, whether trading stocks, options, futures, forex, cryptos, you know the deal. Social media, make sure it's the real me. YouTube.com Mondays and Fridays for the Pulver Report, and verified handles, Facebook.com/RealChrisPulver, and Instagram, Twitter @RealChrisPulver. Okie dokie. SPY's up to 415, right where we closed yesterday. We had a pretty good close to the week, Thursday, Friday. 415 to 420 resistance on the SPY. This 320 area, we're sitting here at 322 going into this week with a lot of U.S. news. Obviously these are market cap weighted ETFs, so they're being dragged up by, high quality tech and large companies. Meta, Google, Amazon have led the way and led the charge with a lot of these recoveries this year. I look across the board. I do see a lot of bullish patterns. I'm still directionally neutral for right now, but I will get more and more aggressive as more confirmation comes in. We said last week that the dollar index is going to be a big play here. Here's the DIA, another one. As far as value goes, I mean, could we get back to the highs? Could we have this be a head and shoulders? Left shoulder, head to neckline, right shoulder. Possible there for the Dow Jones. If we go to the IWM, which is their small cap, your Russell 2000. Same thing here. We have pretty solid support. Could we break above 180 and head higher? Maybe. Right? So pretty interested in long at 163. Even getting long with a breakout at 180. There might be some more ranging ahead, but looking to really, watch price closely. Dollar index, we're sitting here at 101, and with two major U.S. news announcements this week on Wednesday and Friday, I think we're going to have some clarity on what to take away from the dollar. Does the dollar break lower, which would continue on with our pre-summer push from our high here in February, March? And if the dollar continues to get weaker, then that means there's probably some risk appetite out there in the markets where we look to capitalize on it. Stock markets might bode well with some gains this week and really have a solid month. So time will tell, but it's just the beginning. May 1st. Okay, let me get logged into YouTube. Say hi to everybody. Good morning, good morning. And I also have a link that I'll post in the chat for the session on Wednesday. I'll be joining Nick Sayak on Wednesday. Morning, Ranjit. Good morning, David. Good morning, Donna. Giza, good morning. Chris, good morning. Jacob, good morning. Jan, what's happening? Okay. Okay, I'm going to find the link for Wednesday's FOMC. Just give me a second. I'll post this in the chat. Morning, Gary. There we go. Okay, so we will be streaming at 1:30 p.m. Eastern Time. Let's see here. This week's schedule. Wednesday, 1:30 p.m. Eastern Time for an FOMC bonus session. And Friday, 9:30 a.m. Eastern Time, weekly recap. Okay, so you have two links there. One is just the standard link for Friday. Come back and join me on the channel here. And then that Wednesday link is going to be a unique link for that session. Okay. All right. So watching the dollar will really give us some good insight on where to go this week. I think that the path of least resistance is probably weaker dollar. If we're going to see a bullish run in the stock market, if we're going to see a bullish run in gold, bullish run in silver, bullish run in Bitcoin, likely we're going to have to see the dollar correlation where the dollar is going to get weaker. So if that's the case and we continue lower, we had our high here in March, and the dollar's been weaker since. So an April, May pre-summer push makes sense. Path of least resistance to the downside, and that's it. Like by the end of the, really, I'm watching candle closes every single day. By Wednesday's close or by Wednesday, Friday close, we will see where the dollar's at and then make our assessments from there. Oil's trading at 75. We had a little, move off of Thursday, Friday last week. This gap got filled, so I am wondering, either oil comes back to $65 or $60 support, and we just continue to see oil prices get really, really tight, or we do see a little bit of a squeeze in energy into the 90s. Not sure yet. We'll find out. I mean, there is a bullish pattern. This was the big OPEC created cut. That's where we had that big gap. But since the gap's been filled. Gold and silver, again, correlated with the dollar. Gold's up to 2,000. There's big resistance at, this is 2-year highs around 2075. If we break above that, I think gold has room to run. If we pull back a little bit deeper, pretty interested in scooping up some more gold at 1850 or lower. Silver, also having a nice run, 2568. SLV has some shares in that. SLV gapped up to 2360. So I've got 24. This is out to May as well. I've got $24 covered calls with a break even at 17. So that could be a nice chunk of profit. We also have a bunch of credit spreads for equities on demand on SLV. Bitcoin hanging out at 30K. We're at 28,570. Depending on how ugly and gnarly this debt ceiling gets, Bitcoin could have a pretty good run. So convincingly, if we get a break above some fresh highs, I think Bitcoin has room to run. If we hold this 30K resistance, we're probably going to settle back into 20 again, and we'll have some range opportunities. But I think that 20K buy levels are pretty solid. So I will be focusing on that for some added positions on Bitcoin. Ethereum, this resistance, this is past support resistance around 2160. Could we range? Possibly. We come back in, past resistance becomes support around 17. We come down to this equal low around 14. We have, of course, equal lows all the way back to 12. Let's say, worst case scenario for range right now, we have 2100 resistance and we have about $1,000 support. So if it comes back down to support, I'm looking for support at $1,000. Otherwise, higher highs, higher lows, maybe pulls back into this area here around 16 to 1700. And then breaks new highs above 22, and off we go, some open space to the upside. So we'll be watching that. But again, dollar related. Big moves on the dollar. Earnings this week. Let me see if we have any notables. Let's see. Weekend rip. We do have some earnings. Let's find some. So we have semiconductors, ON, NXPI. We have MGM Resorts. Transocean MicroStrategy, Pfizer has earnings this week. Molson Coors has earnings this week. Starbucks, Ford, Advanced Micro Devices, a lot of semiconductor plays. Yum Brands for some fast food. We got Etsy, Anheuser-Busch, Kellogg, some of those defensive plays. Shake Shack, Shopify, Block, DraftKings, Coinbase. Coinbase has earnings on Thursday. AMC for the meme stock traders out there. Warner Brothers Discovery, which is just our competitive streaming service. So, yep, we have some earnings. Let's see how many companies we have. 1,100 companies reporting earnings. So we're definitely in full swing for earnings. Apple, Advanced Micro Devices, Starbucks, Shopify, Shake Shack, Square, or Block Inc., Coinbase, Lyft, Draft. Yep. So there's a lot. That's a ton, actually. So there's plenty of excitement this week. 1,000 plus companies reporting earnings. FOMC on Wednesday, non-farm on Friday. I would not be surprised to see, this or this by the end of the week. So I wouldn't. I don't know. I think $10, $10 on some of these ETFs. I mean, getting up to 425 or 426 or down to 403. I think that's in the cards for this week. We should have some good volatility. There's plenty of reason. Okay. We can take a look at some charts. Look at currency strength. Any other impact events? Aussie gets really strong. JPY a little bit softer from last week's BOJ. There's a little continuation there. We were looking at Forex Factory. Let's go to this week. So PMI numbers, the ISM comes out this morning at 10. Cash rate expected to stay the same for Australia at 3.6. Kiwi employment, non-farm for the US at 148. That's Wednesday. ISM again on Wednesday. Fed funds rate expected to be 25 basis points. That's pretty much baked in. Probably the final rate hike we'll see for a while for the Fed. ECB looking to raise rates on Thursday. So 25 basis points from the ECB. Press conference with regard at 8:45 a.m. Eastern time. We'll trade that during the flex room. And I don't think we have Swiss National Bank until June. And then CAD and non-farm on Friday. Lower expectation though, 180 for the job number on Friday. 3.6 unemployment, that's slightly higher than previous, and average earnings at 0.3%. So man, a lot of busy stuff. Busy week with currency trading as far as Forex Factory goes. Busy week with earnings. Busy week with major news. Should be a crazy week, but I'm looking forward to it. Let me see here. It's going to be a 5/4 expiration. I know that I don't have a lot of those. In fact, I might have 0, unless I'm doing covered calls. So let me check here. 5/4 expiration. Actually, be 5/5 expiration. Is that right? First through the fifth. First through the fifth. Yep. So 5/5. I have 0 expirations this week in options. I might look at some trades. We might look at some fills. Be somewhat directionally neutral. I might take a couple of stabs on the indices, get some active trading. Maybe do some at the monies and see if we're up or down. Maybe I can put one at 420. Maybe I put one at 410 and see if price crosses above or below this week. Make a few bucks. Catherine, was that a question? You spelled my name wrong? Were you missing something? So anyway, any charts, any requests? Look through some currencies right now. Aussie CAD, I'm still looking bullish. Aussie Swiss, we'll see how everything. If we have some risk appetite, then a lot of this Swiss franc strength will hopefully dissolve. And I would certainly like to see some right side of the trend line confirmation on a lot of these Swiss pairs. So Aussie Swiss being one of them. CAD Swiss, same thing. If we break this trend line, get up to 67.50 or higher. Swiss yen, if we put in a top or at 153, this one's going to be tough. This is why I'm not calling a top on the Swiss yen or any of the yen crosses, because the JPY could stay softer. Euro Swiss holding at 98.30. The big break here has to be above 1.00. Pound Swiss has held the lows at 1.10. We'll see if we can break this 200 EMA around 1400. New Zealand Swiss, again, need to break the trend line. Dollar Swiss, need to break the trend line. So without that confirmation, I'm just holding and dollar cost averaging into Swiss pairs, but some confirmation would be fantastic. Dollar Sing hanging here at 33.17. Dollar weakness, dollar strength. We'll find out what happens this week. Other crosses, yen pairs. If you're long the yen, long against the yen, it's been working out pretty nicely. We had a big shift in it last week. Looks like they're pushing to fresh highs. Euro yen, same thing, pushing higher right out of the gates from last week. Pound yen pushing higher with some follow through. New Zealand yen pushing higher with some follow through. Dollar yen 136. Looks like this 140 to 142 area, this pocket, this symmetry, low to high, low to high. That could be some good symmetry on the dollar yen. So if you're staying weak yen, staying with those short-term alignments is paying out nicely. Okay, NQ, you want to look at some NASDAQ futures. NQ. Okay, so this week it's pretty tight to start to kick off this week, but there's so much news. I mean, that's essentially what I'm looking for. A breakout looking to follow, breakout looking to follow. 1,000 companies, 1,100 companies reporting earnings. Fed this week. Unless the Fed's going to come out with this crazy aggressive jawboning message and say, hey, guess what? We're going to raise rates more. I don't think they're going to do that. I mean, right now we have, with the bank situation, tightening credit conditions, that is basically served the purpose as the Fed raising rates multiple times. So after, I mean, think about this, after Silicon Valley Bank, the Fed has raised rates. This will be the third rate hike this year, right? They raised back in, I guess I can go to the calendar here. So go to Wednesday and funds rate. So they've already raised from February to March to now May. So this will be the third hike this year. We've looked at the watch tool. We think there's going to be a raise and then a pause for the next couple of months. And then September, November, December will likely be when we see some rate cuts. That's what the market's at least projecting. So high probability that we're getting that 25 basis points hike, and then pause, September, possibly rate cut. Maybe a pause through September, and this is all potentially going to change on Wednesday or by end of week. We'll see how this kind of watch tool changes. But looking at pause, and then November, December, any changes? Rate cuts possibly coming November, December. So, and why would that be the case? Well, I mean, higher for longer, yes, but this could be all that's needed with tighter credit conditions and stricter lending standards. So is it helping the Fed, reactively bring down inflation? Probably. They've been very firm on the message to kind of deter or discourage, asset spending. But that's it. So for NASDAQ futures, looking at the NQ, I mean, that's what I see price action wise, just looking for a breakout. I just look for a simple close above 13,355 or a simple close below 12,800 and follow along. So look left. If we break this high, we go for this high. We do have some open space up here. We talked about this an August high and an October low. So those are really the big levels, in my opinion, that the market's going after. So bulls melt up, bears aggressively claw back and all of a sudden take control again. But I'm probably at this point I'm probably like 60-40 bullish to bearish. The way that things are setting up price action wise, I think that the market's forward thinking. The Fed's finally hitting that pause cycle. The market's been waiting for a pivot. The Fed's clearly showed a way to step in to kind of backstop this bank contagion. We've had heavy amounts of central bank intervention since 2008. So that really is the new landscape. Like those are the rules, right? I mean, that's the market is dealing with central bank, intervention quite a bit. So they have the tools to do so. I'm not saying it's sustainable, nor is it great. It's certainly not a free market, but at the same token, you're getting central banks that are stepping in to prevent systemic crisis or systemic risk, So anyway, we'll find out. But a lot of data this week, a lot of earnings. So it will be a busy week. I'm looking forward to trading with everybody. Any questions for me? We can keep today's session short and sweet. Any requests? Otherwise, let me just review the indice ETFs again. So 416. I will probably look at. I'm not necessarily going out to like this week. I think there's a lot going on this week, but even getting like the next couple weeks of 420 and maybe a 410 or 405, and see if we can collect a decent amount. Looking at if I can get 50. It's been tough to get decent premiums though. I mean, even going in the money by $5 or $10, I'm only getting like 2 to 5 cents more than what I want. So, I mean, minimums I need 50 cents if I'm taking a dollar spread. But ideally, I'd like to get 55 to 60 cents and do two ways. So if I win one, I walk away with 10 or 20 cents net profit. So anyway, that'll probably be the play. And then I did take some assignments overnight. I think I had JetBlue was assigned over the weekend. So I'll take a look. I might do we're sitting at 703. I got assigned at 750. And that's okay. I might actually keep the shares and do a first in, first out. So I might dump the shares when I was buying it around 11 and keep the shares here at 750. So dump, keep. And I know I take a loss on this one, but I keep it down here and I'll lower my cost basis. I'm still going after, $10 to $14 for a net profit. Kept some shares last week of CCL. I have some shares of Under Armour. What else did I keep? KDP. Oops. Keurig Dr Pepper. We were down to low 30s. So I had some shares I own at around $33, and I'm looking to see if it comes back to $40. I'm keeping it. getting it called away. And then on this one with CCL, took some shares around $9 with a break even in options, and I'm looking to hold on to this one back up towards $20 to $30. So anything at 2020 levels or 2008 levels, pretty interested in holding for longer. There are a lot of bullish patterns right now in the works. So if we get a breakout above here, CCL has room to run. I think $25 to $30 is not unrealistic for a big play. Okay. All right, so let me just do a little recap for this week. It's going to be a busy week. Looking forward to trading to everybody. So this week's schedule, we have equities on demand, Monday through Friday, 10 a.m. Eastern Time. Flex trading room, Tuesday through Thursday, 8:30 a.m. Eastern Time. I'm going to have a bonus session on Wednesday. It's an FOMC bonus session. Wednesday at 1:30 p.m. Eastern Time. And then we have our Friday recap. I'll just put Pulver Report recap. Pulver Report weekly recap, 9:30 a.m. Eastern Time, Friday. All right. And sprinkle in some extra classes. I'll still have my Masterflex class on Friday. I will still have Equalizer Pro on Friday. I know I have a Wealth and Freedom class this afternoon. So good stuff. Right. If you have any questions, let me know. Otherwise, I'll wrap it up here. Get ready for equities on demand at the top of the hour. And let's have a good week. It's going to be a busy one, but looking forward to it. All right, buddy. Thanks a lot. Have a good day. Have a good week. And I'll see you in the trading rooms. Thanks. Bye.